Okay, welcome everyone. I'm glad to see you all. And yeah, just let's wait for the rest to join the room, like a couple of minutes, maybe less. Meanwhile, I will tell you what we will discuss today and what are basically the hot topics that we will cover, because many of you asked to cover the topic of, well, basically to elaborate on more into what makes the SBot different from the classic bot, and when it is optimal to launch the SBot compared with the classic bot. And of course, for the newcomers, I will explain briefly what is the automated algorithm that we implemented in our bots to let you guys maximize your returns and to minimize the risk in case if the market goes in the opposite direction as you predicted. So my name is Dmitry, and now let's begin our webcast. Let's see. Yeah, if you are all present. Okay, that's great. So yeah, hot topics for today is gonna be the high yield strategy. Basically how to increase your exposure in the market so that you can maximize your returns, and of course what are the side effects of this strategy, because you know that for maximized returns there is an increased risk exposure, so that's something always you have to keep in mind. We will also cover the low risk strategy, which is also known as the conservative strategy. And I will focus today specifically on the SBot and the classic bot. So let's jump into the first topic, which is gonna be the automated algorithm that we have at Bitsgap. So that's something new for newcomers. And yeah, so the point here is that at Bitsgap we have so-called grid algorithm, and the idea here is that you have a trading range within which you expect the price to swing, right? And within this trading range you expect the bot to make trades on your behalf. So we have the sell side, which is represented by limit sell orders, and we have the buy side, which is represented by the limit buy orders. They are also known as the grid levels, okay? So once you decided that what is the trading range within which you expect the bot to trade, and this trading range is defined by the upper price and lower limit price, and on Bitsgap you can drag this upper price and lower price in any direction you want to configure your trading configuration. Okay, so you see, this is my trading configuration, the sell side and the buy side. I can make it narrow, I can make it wider, so it's clearly up to you to define the trading range. Okay, so the cool thing about grid algorithm is that it follows a simple rule. It just buys low in order to sell later at a higher price. So let's assume that the price swings and it triggers the first limit sell order. So what's gonna happen here is that the bot will execute this limit sell order, and this basically implies the cash out. So it sells the base currency, right? And in this case, that's the example with Link trading to USDT. So here it sells Link and we cash out in USDT, and later this USDT will be used to allocate a new limit buy order right below the last price. Okay, so what's gonna happen? Let's assume that the price swings again and now it falls a bit. So this newly placed limit buy order is going to be executed by the bot. So the bot is going to use the quote currency, in this case that's the USDT, to buy the base currency, which is Link. Okay, so it buys Link, and guess what happens next? Exactly, it's going to place a new sell limit order in order to sell this newly purchased link coins. So this process ensures pretty much a never-lasting trading as far as the price stays within the upper price and lower limit price boundaries. Okay, so that's the way greed works. So now the big question is, what is the difference between the classic bot that we have and the SBot? Because say it looks like they are pretty the same. You see they have the same trading range, which is defined by the upper price and lower price. So you can drag the line in any direction you want, and same applies to the classic bot. But the primary difference here is how these bots distribute your investment. So when it comes to the classic bot, and for this one, so here it is. So in case, like for the classic bot, the idea is that it always buys and sells the same amount of the base currency. In this example, that's LTC as the base currency. So that implies that with the rising price, the cash out value rises, because you see, as the price goes higher, then that means in order to sell 10 Litecoins, it's basically gonna be a higher number. All right, so you see at first grid it's $120 cash out from the market, then the price goes even higher, and this 10 LTCs is now worth 130, so you cash out with 130. So that's the point of the classic bot. Whereas if the price falls, right, and you know that now it buys and sells always the same amount of the base currency, you say on the downfall, it basically now spends less of the investment per each grid level. Because when the price is lower, that means in order to buy 10 LTCs, you now have to spend less, right? So you see $100, then $90. So what used to cost $90 now costs $80. So that's the point here. Whereas in case of the SBot, and I think it's example here in Reef, it utilizes another logic. So you say here it makes sure that it always spends the same investment value per grid. So it always makes sure that it cashes out with $100 and that it always spends $100 to buy the base currency. So if it falls, let's say to the lowest point, it's going to execute all of these buy limit orders. So that's going to be worth $400, right? So now your risk exposure is increased by $400, see? And the amount of base currency that you now possess is basically 10 plus 11 plus 12 and plus 13, okay? Whereas in case of the classic bot, you see, as the price falls, here your risk exposure, if you add all of these numbers, it's going to be around $340. So compared with the SBot, within the trading range, on the downfall, the risk exposure on the classic bot is lower compared with the SBot, and which is something bad if the price reverts from that point. So if the price bounces up, you say your risk exposure is only 340, so you have lower returns compared with the SBot, where your exposure is $400 compared with 340 that we have in the classic bot, okay? So that's why, in order to answer which one is the best, it really depends case by case, because you never know how exactly the price is gonna swing on the market, okay? So it can be the case that even though you anticipate the market to move sideways, right? It can be that on the sideways market, the price can swing like this, only in the top area of your trading range. It can also be the case that it's gonna downfall and move within this area. And it also can be the case that it can swing like crazy, bouncing off the support and reverting back to the resistance line, okay? So that's why there is no one perfect answer to say which bot is like the best one, depending on the market scenario. But as a rule of thumb, and based on the backtest results that we made, and basically based on my practical experience, it turns out that on the sideways market, basically the sideways market is when you see the price moving like this within the horizontal boundaries. The SBot strategy is the best one. It brings higher returns compared with the classic bot. Whereas in case of the classic bot, and let me actually delete all of these ugly drawings, yeah, to show you exactly what I mean. Whereas for the classic bot, the perfect scenario is when the price moves like this. Okay? So that's the primary difference, that the classic bot has proven to be more successful on the rising market when the price moves like this. You see, it steadily establishes new higher highs. And for the SBot, we are looking for something like this. Basically, that's the horizontal movement within the support and resistance lines, okay? So the point here is in which market phase we are currently at. So depending on the market scenario that we see right now, this strategy varies. So for the accumulation phase, which you see is basically the sideways market movement, and for the distribution market phase, which is also the sideways movement, it is optimal to stick with the SBot strategy, okay? Whereas when you anticipate the market to enter the advancing phase, or you recognize that we are already in the advancing market phase, then stick with the classic bot configuration, because on the rising market it brings more returns, okay? And the cool thing about Bitsgap is that you don't actually have to blindly trust me on these things and these conclusions that I make. You can test this on your own. So you can actually see what would be the return on the SBot and on the classic bot on the same date range, on the same cryptocurrency pair back in the past in the backtest mode. So in the backtest mode, you set the configuration and you decide which is the date range that you want to backtest, basically to see what would be the return if you would have launched the bot, let's say back in the 2nd of March until today. So during this period, what would be the return? And compare this result with the SBot configuration in the same date range, but just make sure that the trading range is the same, okay? And you can backtest this to see which one has proven to be more successful. And you will find out that in most cases, on the sideways market formation, when the price swings like this, it is optimal to stick with the SBot, whereas when the market moves like this, it is optimal to stick with the classic bot, okay? So on this market phase, launching SBot would bring you less returns than the classic bot, just because the way they distribute your investment varies. And it turns out that in the classic bot, as the price goes higher, it basically increases your exposure to the value of the base currency more than the SBot. because we remember that in case of the classic bot, it always sells and buys the same amount of crypto. Okay, so that's the point, you see. Let's now go back, and I will show you some other tips and tricks that we have here at Bitsgap to empower you with more instruments to maximize your returns and to minimize the risk. So let's see first of all what questions you have, and thanks to the support team that we have in the live chat, I have the opportunity to select only the most interesting questions. But anyway, don't worry, all your questions will be answered. So just be patient. Okay. Okay, so let's move to the next topic, which is the high yield strategies. As now we learned that the SBot is optimal for the accumulation and the distribution market phases, and the classic bot is optimal for the advancing market phase. Now is the time to figure out how to maximize our returns even more, which basically implies the high yield strategy, which increases the risk exposure in the market. So the point here is that in order to create a high yield strategy which brings you the highest return possible, you need to find those cryptocurrencies that are trading to, let's say, to Bitcoin, to BNB or Ethereum. So for example, you can look for SUS trading to Bitcoin. We can actually do this on the platform. There's no need to use the trading view. So let's see SUS trading to Bitcoin. So it looks like the market is appreciating to Bitcoin. So that means that for one SUS coin you can purchase more Bitcoins, which is something that we are looking for in the high yield strategies, because here if you launch the bot on SUS trading to Bitcoin, that means that the bot is gonna accumulate returns in Bitcoin. And the result here is that if the value of Bitcoin relative to USDT appreciates as well, that's gonna bring us multiple returns. So let's see. Let's select SUS trading to Bitcoin. Let's remove all the drawings here, and let's compare with the Bitcoin trading to USDT. Let's basically align the charts. So yeah, you see? So not only does the value of SUS relative to Bitcoin appreciate, which we can see here on the chart, but the value of the Bitcoin relative to USDT appreciates as well. And so we generate returns in Bitcoins, right? And at the same time, the value of Bitcoin relative to USDT appreciates as well. This is a double effect. We generate returns in Bitcoin in the first place, and this return that we seized from the market as the bot been trading for us now brings us returns in the USDT as the value of Bitcoin appreciates. Though the side effect here is that if the market falls, then your loss is going to be double X. Okay, so you generated returns in Bitcoin, right? But unfortunately, assume that the value of Bitcoin depreciates relative to USD. This will bring you 2x of a loss. Okay, so what you made in Bitcoin is now in the plunge. So not only the cryptocurrency pair that you've been trading depreciates, and we can actually find some examples, like I think basic attention token trading to BTC is something that can be a great example. Now it actually appreciates, which is good. I think 0x relative to Bitcoin depreciates right now. Yeah, you see? So the thing here is that imagine that both Bitcoin relative to USDT, imagine that this one is Bitcoin relative to USDT, would depreciate, and at the same time the bot which you launched on 0x trading to Bitcoin also depreciates. So what you've made here in Bitcoin, this return depreciates, and the value of the base currency which you are trading on the bot, which is 0x, is also depreciates. So this is a 2x loss in this case. So that's something you need to keep in mind always when you are looking for high yield strategies, because high yield strategies, they imply that at some point of time you can be wrong. You cannot be always right? So at some point you can be wrong, and you expected the market to go higher, you expected Bitcoin to appreciate relative to USDT, but unfortunately what happens is that the value of Bitcoin relative to USDT depreciates, and the cryptocurrency pair that you selected to trade also depreciates, like you see here, 0x trading to Bitcoin. So this is gonna be 2x loss in this case, but you expected 2x return. So that's the price you have to always pay in order to generate the highest possible return that you can generate in automated trading that we offer here at Bitsgap. Okay. So that's what it takes to create a high yield strategy. And for now, it looks like there are some actually cryptocurrencies that are doing well relative to Bitcoin, which is the one I show you, which is SUS trading to Bitcoin. Okay. Yeah. That's actually not the recommendation or whatsoever. It's just that from the observation here, it looks like it appreciates. And we know that Bitcoin relative to USDT also appreciates, which is now $56,700. And I think easy relative to Ethereum, which is another high yield strategy, guys, which you can consider if you want to accumulate returns in Ethereum. And if you anticipate that the value of Ethereum will appreciate to USDT even more than the Bitcoin, then it makes sense to stick with the Ethereum accumulation strategy. And easy trading to Ethereum is the cryptocurrency pair, which is worth consideration right now. You see, it just bounces off the angled up support line. You see it managed to bounce off this line, this one, and you see right now that's the point of the bounce off. Yeah, so it looks like it's doing well right now. And yeah, that's the way you scan the market to find those cryptocurrency pairs that can generate you high yield returns. Okay. And now regarding the low risk strategies, also known as conservative strategies. And what I mean by that is basically those cryptocurrency pairs that are trading to the USDT. Because when you have pairs like, let's say, BNB to USDT, then here your only risk exposure is BNB value, okay? So that's the only coin the value of which can appreciate and depreciate intraday. Whereas what we know is that the USDT costs $1 and it's gonna cost $1 tomorrow, and it's gonna cost $1 the day after tomorrow. I mean, yes, of course there are some regulatory concerns about the USDT, and there is a threat always, because that's the decentralized economy that we are trading here. So anyway, we know that it has proven to be quite stable. The USDT, it's been $1 yesterday, it's $1 today, and it's $1 tomorrow. But if you're if you don't like the USDT, we have other stable coins, right? We have DAI, we have BUSD, we have TUSD, we have USDC. So, and yeah, BUSD as well. So it's clearly up to you to decide to which stable coin you want to trade. Just make sure that there is enough volume on the market so you can generate maximized returns, okay? Because volume on the market is everything. I mean, the more liquidity there is in the cryptocurrency pair, the better it is for the crypto. It means that traders are interested in this cryptocurrency and they have trust in the stable coin to which it is trading. So that's something for you to keep in mind. For example, right now, Bitcoin trading to USDT has more liquidity than Bitcoin trading to BUSD, for example, okay? So yeah, it's something for you to keep in mind always, that liquidity has to be taken into account. Yeah, so let's go back to the platform and I will just show you how you can quickly configure any bot. So let's say you have no clue which crypto to trade, and for this case we have recommended strategies. That's basically the list of cryptocurrencies that have proven to be and actually let's switch back to the real account mode, which right now I'm on the demo mode where I have virtual money to trade with, and you will notice that recommended strategies in the demo mode, they are different compared with the real account. So on real account I have other recommended strategies, you see, and these are results based on the return generated by the bot in the quote currency. So you see it managed to make 200% in Ethereum relative to your investment throughout the period of last month. You can sort this by weekly results. So you see, based on weekly results, the STPT is the top one. So if you like, I mean, you can use these metrics as a kind of a benchmark for future projections. So you see that STPT, like the bot made 30% on STPT. So that means that there is enough liquidity on this coin, and this coin is interesting for the market. Traders are trading it, investors are investing in this coin. Otherwise, it would be like barely possible for the bot to make like to generate 30% just in a matter of 1 week. Okay, so that's something for you to keep in mind, that the high return for the limited time period, that means that there is increased volatility in this crypto, and at least you can use this metric as a kind of benchmark for future projections. It doesn't mean that the next week it's going to make exactly 30%, but you can use the past metric to see, like, I mean, to at least to anticipate that it's going to make close to this metric. Okay, at least 10%, but is like something you can expect. 20% is going to be your high yield benchmark for this one. Yeah, so this is like the statistical results here. Let's say I want to trade VSN to USDT, and I'm not going to use my real account. I'm just going to switch back to the demo mode to demonstrate any random trade. So let's say we selected, yeah, let's stick with the SUS trading to Bitcoin. Why not? So what I see here right now, like quick analysis, is that the price moves somewhat in the sideways formation. Yeah, it's the market is kind of rising, blah blah blah. Yeah, so let's say I anticipate the market to move within this sideways formation. So let's say I anticipate to move it like this before it breaks the upper price. So I define my lower price to be exactly where I see the support line based on previous higher highs and lower lows. And I place my upper price exactly where I see the resistance line. Okay, so that's how you can make a quick configuration based on support and resistance lines. That's clearly something that you can use. Of course, you can have other tools to use to create your configurations, not just based on the support and resistance line. I mean, it's clearly up to you to decide where you want to plot your upper price and lower price. So you see it right now, my configuration looks like this. And this configuration implies that I have around 60% of sell orders, because you see this wider sell zone, and it looks like around 40% is going to be of my investment allocated to the buy side. And that's what I see exactly over here. You see a 3,300 USD investment is proportionately distributed with the SUS coins. So this is the base currency, which is going to be distributed across all of my sell orders in this sell side area. So my 11,000 SUS coins, they are here in the sell side. And the base currency is going to, the quote currency, which is BTC in this case, is going to be used to purchase the SUS coin in case if the price falls, okay? So you see this exact distribution, okay? So that means that instantly, as you enter the market, you are already exposed to the value of the base currency by 60%, okay? So in order to initiate this bot, this is the amount of SUS coins that you must possess on your balance so that the system can plot all of these sell limit orders correspondingly. And that means that you are exposed to the value of the base currency by 60% at the very start. If you want to reduce this risk exposure, then just drag your upper price lower, and in this case you see the distribution changed. It's now 9,000 SUS coins required to launch this trading configuration, okay? So what are the techniques that you can use to increase or decrease the risk exposure? So you have grid levels, okay? And the more grid levels you plot, like in here it's possible up to 180, the narrower your grid step becomes. You say that's basically what stands for the distance between your grid levels. So let me show you. So you say what we call the grid space is basically the space between our grid levels, okay? And that implies that your marginal return is going to be reduced here. It's 0.12%. So that's the step difference between the buy and sell order. That's the distance between your sell and buy, okay? If you have fewer grid levels, that means that now your marginal return, it's also known as the grid step, is going to be higher, okay? Because now your gap between the purchase and sell price is increased relative to the previous configuration where we had 100 grid levels, okay? So there are like you see, if you want to have your marginal return to be, let's say, worth 100%, then just plot 1% here and it will automatically adjust the amount of grid levels, which exactly corresponds to the marginal return of 1%, okay? So each trade will bring you 1% of the return in this case. But notice that now your grid levels are located quite far from each other, and that means that the price must swing crazy enough to capture all of these grid levels. Because when you have more grid levels, you see now this is what we call high frequency trading, because your orders are so tightly located to each other that even minor price swings will be activated here, okay? So that's the point. Let's say we want to stick with 20 grid levels. Let's see if I can afford to have 20 grid levels with the investment of 3,300. It says that yes, all is okay. But what if I want to plot 180? You see, now it's not possible because I just cannot afford this one to have so many grids. Let's actually make some adjustments like this, maybe like this. Yeah, you see, in order to launch this bot, I need to adjust the amount of grid levels. So yeah, 70 for this configuration. What about other cryptocurrencies? Let's say 1H. No, actually, that's the one I have here. Maybe Aave trading to USDT. Let's see, what about this one? Let's say $1,000. and 92 grid levels. You say it's not possible. You say at least 1,400. Why so? Well, the point here is that per each grid level, there is a minimum trade size required by the exchange. So that's why the more grid levels you plot, the more investment is required. So what if I still want to stick with the 1000 USDT for this configuration? In this case, I need to reduce the amount of grid levels. And I can do this automatically by clicking this adjust grid quantity. You see now 65 is the exact amount I can afford with a 1000 USDT investment. What if I increase my investment to, let's say, 2000? Yeah, so now clearly I can have at least 80 for sure. What about 100? Yeah, still possible. 130. Yeah, it's all good. So yeah, it's all about the grid configuration and the investment that you have. So the first step for you, like, just let's refresh what we learned so far, is to define the market phase. And based on this market phase, you decide which strategy to use. For the accumulation distribution, we stick with the SBot, and for the advancing, we stick with the classic, because they have proven to be more profitable on the advancing mode. Okay, so of course we do make some minor changes, and sometimes results can be different, but just, I mean, based on my practical experience and backtest results, these are what it is. SBot for the sideways and classic for the rising market. So the next step is to define the trading range, and the third step would be to set the investment and the grid amount that you want. The final step is to use all available tools that we have to maximize your returns even more, and to minimize the risk in case if you were wrong. Okay, so speaking of the risk management, the stop loss is, well, highly recommended, because in case if the price falls, at least here is where your loss gonna stop. So you won't lose more if the price falls even further down. So that's the point here, where you see the stop loss is where your loss halts. Okay, so you won't lose more than to that point. So you can actually set the stop loss manually, like over here, for example, or you can drag the line. Okay, so, that's what it is. I mean, what it takes to have the basic risk management tool. It's the stop loss. Okay, in case if the price falls and breaches the lower price and it triggers the stop loss, it's gonna sell all of the base currency which it purchased on this path down to the stop loss. So by that, it ensures that it exits the market by 100%. It sells all of the base currency. So yeah, that means you are no longer exposed to the value of the base currency. If it falls further, we don't care, because we don't have this base currency anymore. So what about the profit maximization tool? Like, the best one is here is the trading up. So the cool thing about the trading up is that you know that the trading range is the area within which the bot is gonna trade. That's the rule of thumb here. It's gonna trade where the trading range is. So as far as the price remains within the boundaries, it's gonna trade. Though there is an exception here. Let's say the price goes higher, it reaches the upper price here at that point, and the price goes even higher. So without the trading up, what would happen is that our trading would stop exactly at that point where we have the upper price. Okay, but thanks to the trading up enabled, the bot will adjust the trading range so that it follows the market rally. So now your trading range is going to be over here. So basically, this function allows your bot to follow the market rally. And here's the perfect example. I have Eufy trading to Bitcoin, and it's been like 3 months and 26 days so far. Actually, maybe not the best example. Let's switch back to the Rand, maybe to Bitcoin. Let's see what I have here. Yeah, sometimes it takes time to load all the data that we depict on the chart, because there can be so many trades. Yeah. Maybe still not the best one. Maybe other trading to USD. Yeah, so here's the perfect example. You see, I got stuck here in this area. This was my trading range at the time when I launched this bot 8 months ago, guys. Like, that's insane. I have some bots that are still active, like 8 months, 10 months. That's crazy. Shit. Yeah, well, anyway, you see in this bot, I did not have my trailing up enabled. Yeah, you say it's switched off. So that's why I was so unfortunate that I got stuck here in this area, even though the price then rallied like crazy, you see. And I'm pretty much sure that my return here right now would be around 150% if I would have enabled the trailing up, okay? So always pay attention to this instrument, because it enables the bot to follow the rally. So it can be the case that you are away from your laptop, maybe you are sleeping right now, and the market is making crazy moves upwards. So if you have your trailing up enabled, then the bot will follow the rally automatically, and you don't have to worry about it anymore that you skipped the rally, because the bot follows it with the trailing up enabled. Okay, so that's the cool thing about trailing up. And by the way, we have the, just like 2 days ago, we released the video that I made, and basically I launched bot on Bitsgap, on 3Commas and Bituniverse, to demonstrate the difference and what it takes to launch the bot on all of these platforms. Decide, like, I mean, yeah, the pros and cons, so all of that. Due diligence done, and we have perfect results to share in this video, where you can find what it makes Bitsgap so good and what are the tools that we have to maximize your returns and to minimize the risk. Yeah, just go on YouTube and go Bitsgap, subscribe, and that's the first video that will pop out. Yeah, just launched it like 2 days ago, and yeah, watch it. And you will find what makes Bitsgap significantly different from other platforms that also try to implement the automated trading in crypto. Okay, so yeah, that's the thing. The trading up is a big thing, and I actually always make sure that I have it on. These are my sample trades, then that means that in some active trades I don't have trading up on. But yeah, in most cases, I actually have my trading up enabled, and because I want my bot to follow the rally 24/7 on my behalf. Like, if you forgot to switch the trading up on, then you can always go to the settings and make sure it is on. Same applies to the stop loss, and same applies to the take profit. The cool thing about the take profit is that you can set the investment change that you want the bot to achieve, so that as it achieves this percentage, it just closes the bot. Okay, so for example, let's say for UFI Bitcoin right now my investment change is 15%, which is cool, but let's say I want to close it as soon as it reaches 20%. And to do that, I just go to settings, I switch on the take profit, and I set 20%. So by that, I make sure that as soon as it reaches 20% of the investment change, it will just close the bot, it will sell all of the base currency that I have here in this active trade. So that's the 100% exit from the market. Right now, by the way, in order to see what is your current risk exposure in the strategy, just go to settings, here, information, and you see the exact amount of the base currency right now in open orders. And by the way, all of your open orders are here. You see the sell side, you see the buy side. You can filter the column, you see which is the lowest price it's gonna buy, which is the highest price it's gonna sell. So all information is provided here for you, and you know exactly what is your current risk exposure and how much is there in the quote currency, like which is, so quote currency stands for the volume in your buy orders, and the base currency stands for the volume in your sell orders, because the base currency is what we sell and the quote currency is what we use to buy the base currency, right? So all the metrics, they are here. And like another cool feature that we have is the bot statistics. You know exactly what is the daily return the bot achieved since the inception. And you can use this data to analyze the performance and to compare these metrics with other configurations. Let's say you launched SBot configuration on UFI to Bitcoin, and what you also did is you launched the classic bot on UFI to Bitcoin at the same time, simultaneously, to compare these configurations, how two different configurations will behave on the same cryptocurrency pair, so that you will find out which one turns out to be the most successful. And using these metrics, you can compare those configurations to see which one brings you the most returns on a daily basis. You see, we have the average daily return, that's 0.34% for my UFI to Bitcoin. So it brings me exactly 0.34% on average relative to my investment in Bitcoins every single day. Okay? So all the metrics you need to analyze your performance, they are already here. The average daily return, the investment change, which is basically the primary metric for you, because it takes into account the value change of the base currency, whereas the column where you have the bot profit is always positive, because the cool thing about automation is that regardless of the market trend, let's use another one. So regardless of the market direction, upside, sideways, or even on the downfall, like Bitsgap bot is able to generate returns in the quote currency every single day, regardless of the trend. Okay, so that's why this column is always positive. What you need to understand is that the value in the investment change can be different. Like in case of UFI to Bitcoin, you see, even though the bot profit is 39%, my investment is only 15%. Why so? That's because of the downfall, which you see over here from the 8th of March right until today. Yeah, well, actually even more, you see, over here. Huge downfall. And even on this downfall, the bot was able to find these minor trade opportunities to buy low and sell high, you see? So it basically, on the downfall, it trades for me, generates returns in the quote currency, and by doing so, it offsets the negative value change of the base currency. But still, I am exposed to the value depreciation of my base currency, and that's why I have 15% compared with the bot profit, which is 39%. Okay, so once again, it's 15% because UFI depreciated heavily from that point. That was the mid of February until today, you see? That's why. And that's the key metric. That's the investment change relative to your initial value. So if you multiply your investment by this percent, you will get the exact value of your position as of today, okay? So don't be confused. Just take into account that the change is your primary, like the top one to monitor, okay? The bot profit is the one that you use to see the success rate of your strategy. the average daily is the metric that you use to compare different strategies with one another to see which one has proven to be the most successful, which is something that you can also analyze in the spot history. So these are all my closed trades. And as I close these bots, I always can come back to see what was the configuration that I used in this bot. What was the average daily? You see, this one has proven to be successful. So, I mean, if I want to launch the bot once again on ING to Bitcoin, for sure, I will go to spot history to see what was the configuration that I used, which has proven to be successful for me. You see, the grid spacing 0.49, the investment I allocated, and I can also see, yeah, I closed it by the stop loss, okay? So all the metrics are here, basically. The lower price I said, the upper price I said, yeah, so even the amount of grid levels, you see, 70 grid levels, that's the configuration that I used. So use the spot history to find your winners so that next time you are willing to launch the bot on the cryptocurrency pair that you used to trade before, just go to the spot history to see what was the configuration which made you so successful in this trade. Okay, so that's like another outstanding thing at Bitsgap. It's something that you won't find on other platforms, and that's only at Bitsgap where you can have such a thorough and sophisticated analysis, you see. So let's see the time. Okay, so let's go back to see what are the things that we wanted to cover today. So we covered high yield strategies, we covered low yield strategies, we covered what makes SBot different from the classic bot, and I think I promised to show some other risk management tools that you can use. So apart from the stop loss, you can exit the market with the exit options over here. So you see right now, depending on the investment change, there is a set of exit options. So I click on it, and right now for this one I have two options to exit. Either I can sell all of the base currency at the market price, and it's gonna sell exactly this amount of UFIs, or I can cancel all my open orders. So you see all of the open orders that I have here, they will be cancelled on the exchange, but the UFI and the Bitcoin, which is in the quote currency here, is gonna be like, it's gonna stay on my balance. So even though I closed the bot, I mean I closed all of the open orders, I'm still exposed to the value change of the UFI. So if you no longer want to be exposed to the value change of the base currency, which you used in this trade, make sure to exit the market with the market sell. Okay, because this is 100% exit from the market. Whereas by canceling out all open orders, you just basically halt the trading, but you are still exposed to the base currency. Okay. Unfortunately, or well, actually, thanks. Well, I don't have negative trades here. I mean, I don't have losing trades, but I actually need the one right now just to show you the third option to exit the market, which is the break even. And since I don't have this losing trade to show it right now, you just have to follow me. So like if you have negative trade, like you are in minus 10% for example, then you will see this third option to exit, which is sell at the break-even price. That's something that you will see, which means that this is the price that it sets where if the price is reached, let's say your break-even somewhere at that point, break-even. So if you are in the downfall and you are already minus 10%, but you don't want to lock in the minus 10%, you don't want to tolerate this result, you still want to exit the market with better results. And like the first option is to exit with the 0% of the return, which is something like better than minus 10%, right? But still worse than, let's say, 1% of the return. Yeah. So that's why that's the third option, which is known as the break-even, where you exit the bot with a 0% of the return, which is an option only if you are in the negative side. So that implies that you need to wait for the price to bounce off back a bit to reach this break-even price so that it exits exactly with the 0% of the investment change, okay? But yeah, still, this is quite of a risk, because on the downfall, to expect the market to rally so that you reach the 0% of the return is something quite risky, because that's basically playing against the trend, okay? But still, that's an option, and if your research is sound and you anticipate the market to make a short-term revert, then that's clearly up to you to stick with the break-even exit option. So far we have 5 exit strategies. That's the stop loss in case of if the market moves in the opposite direction as you predicted. That's the basic, the simplest one, and the most important one to use always. That's something that I always recommend. Make sure you have the stop loss on when you launch the bot. That's the first option to exit the market. The take profit, that's the exit by the investment change. Let's say 20%. As soon as it reaches 20%, it just sells all of the base currency. And other 3 options, they are here. That's the sell at market right now. That's cancel all my opens orders right now, but still I'm gonna be exposed to the base currency. And the final option is the break-even, just like the one I explained to you a couple of minutes ago. So these are 5 exit strategies, guys, for you to follow based on your trading configuration and the price behavior on your cryptocurrency pair that you are trading. Okay. So yeah, by the way, in order to find and develop your best strategy, make sure to trade in the demo mode. That's exactly the one I'm using right now, because in demo mode I have virtual money literally on every important cryptocurrency exchange, which I can use to experiment. Okay, that's basically the sandbox for you to find your best solution. So a trick for you guys is that you can simultaneously launch several configurations on one cryptocurrency pair just by switching with other cryptocurrency exchanges. Let's say there is a Bitcoin trading to USDT for sure on the Binance, and you will find the same cryptocurrency pair on another cryptocurrency exchange, and you can simultaneously launch different configurations or the same configurations on different cryptocurrency exchanges to see the result, to see the outcome, to see what makes them different. Because it can be the case that on some exchanges the trading fee per execution is lower, on some exchanges it's higher. So that's why you will find out that some configurations launched on the same cryptocurrency pair on different exchanges can be lower or higher. Okay, so that's the thing to also take into account. The trick number 2 is if you want to launch several configurations on one cryptocurrency pair, let's say Bitcoin to USDT, on one exchange, let's say Binance, then there is an option. You see, right now I have ING trading to USDT. Let's see if I can launch another one, ING to USDT. You see, I am not able to do this because I already have this bot active trading. So the trick here is to find if the ING is trading to another stable coin. You see, it is trading to BUSD. So that's the trick. You see, the only difference is in the stable coin, but That's not really the difference, because we know that the value of the stable coin is exactly $1, so you won't see the difference in the price of ING to BUSD relative to ING to USDT. But that's the trick. You can launch the configuration on this one and then USDT simultaneously. That's the trick, guys. Okay. Well, more or less a trick. It's just that I'm playing with the stable coin, which I assume to be pretty much the same. Like USDT, BUSD, it's $1, so what's the difference? So I see the question. If investment is $100 and the investment change is 10% and the bot profit is 10%, will I get 20% of my investment if I close the bot? So the answer is no, because they are not added up together. The thing is that in the investment change, the bot profit is already taken into account. Okay, so you see this 15% investment change in my U fee. So that means that this bot profit is already taken into account over here. And without this bot profit, my change here would be, I assume, somewhere -5%. So thanks to the bot, thanks to the profit, it managed to accumulate. It offset the fact that the value change of the U fee is now depreciating, and that's why instead of -5%, I have 15%. And I have actually a perfect case for you here. How on the downfall, the bot is able to save my investments. So you say, here I compare a simple hodl strategy with the Bitsgap automation. So I assume that you just purchased Quantum, where I have hodl over here. And you purchased it in anticipation that it will appreciate in the future, so that you can lock in decent returns. But unfortunately, what happens is that the price falls, and according to the current price, you are in the -6.88% of a loss. That's the hodl strategy here. You just buy crypto and hodl it, nothing else. But in case of the automation, you would have only -3%. Because during this downfall, the bot managed to find these minor trade opportunities to buy low and sell high. You see this marginal effect, and this results in +2% in bot profit, and this profit is used to offset the -6.88%, and that's why it's only -3%, because the bot profit is already priced in the investment change, and that's why it is only -3%. Whereas if you would just simply buy Quantum and hodl it in your portfolio, you would be in -6.88% area. Okay, so that's another advantage of automation, is that even if you were wrong about the market direction and unfortunately the price falls, you are like, the bot minimizes the loss like significantly. You see, that's by more than twice. It minimizes the overall loss. So once again, answering to your question, the key metric is investment change. So if you invest at $100, and your investment change is 10%, that means that your return is $10. Okay? And that means that in this 10% investment change, the bot profit is already priced in. That's the rule of thumb here in this case. So yeah, by the way, quickly to remind you that Bitsgap participates in the Binance tournament, which is the spring tournament, worth the pool size is $1,600,000, and you can join the team here. By the way, the last time I checked, there were like 360 users, I think. So yeah, 360 Bitsgapians are already waiting for the tournament to kick the asses, right? So we can do this together, guys. You see that there are so many prizes pool here. There is an individual pool, there is a team pool, so lots of opportunities to stand out. And the last time we have proven to be successful. Like the last time there was a Binance competition, we made the 9th place. I mean, we were in the top 10. the 9th place. That's insane, guys. And now, right now, I mean, having more skills, having more experience, and so many people all together, efforts combined, we can achieve even bigger results, like top 5. Why not? I mean, yeah, big up thing. There is also an exclusive futures combo bot which is about to be released, and that's something that you all been waiting for. Yes, you will be able soon, like I mean really soon, you will be able to launch bots on futures contracts. And there is a trend bot we are about to release, the press release, the video is also incoming, the webcast related to futures bot is also incoming soon, and I'm actually working on it right now, already trading the futures bot in the beta mode, and yeah, just making preparations for the next webcast to present you this brand new product that we've been waiting for so long and testing it for so long, to make sure the algorithm is smooth and you can generate steady returns and the risk is minimized as much as possible. So, and based on this, there is an exclusive promo as well. Yeah, so all information is here, and I hope the support team is gonna send you the link right now in the live chat box. Yeah, so Paul, please send the link which is in the help desk. That's this one. So that, yeah, so guys, yeah, join the team. All together combined, more chances to kick the asses. Let's do this. Now let's quickly go back to the platform and let me see what questions you have. So when it comes to choosing the bots, is it better to rely on monthly bots, daily or weekly? So as a rule of thumb, the more time we have to, I mean, like monthly result means that there have been 30 days. So the more days passed, the more data we have to analyze, and the long-term analysis is always better than the short-term analysis. So that's why for me it always makes sense to stick with the monthly backtest results rather than with the 3 days and weekly results, because I mean, I studied the statistics and all that stuff, and I mean, the rule in statistics is that the more data you have, the more valid is the research outcome. So it makes more sense to base your future expectations based on monthly backtest results. Okay, so right now it's only possible to have a monthly backtest result, but who knows, maybe we will enable even longer time periods, maybe 6 months, 1 year. So you will be able to backtest strategies with a time horizon of 6 months, 1 year. Okay, so you see, I have some bots active for 8 months, 10 months. So you would have this opportunity to backtest them. Yeah. So yeah, recommendation, like based on my experience, is the monthly backtest result. So how can you add funds to a bot while the bot is working? Well, the answer is that it is not possible. Once you launch the bot, that's the only investment value. I mean, it's frozen. You can't do anything about it, because otherwise it would imply that you would cancel out some open orders and it would have to create new orders. I mean, it really makes sense just to close the bot and launch it with new configuration. So let's say I'm no longer satisfied with my 1,900 investment. So what I can do, I can close it. Let's actually close it. Bye-bye. And I can launch this bot with now other metrics. It was what, 900 and something, right? 1,900. But now let's say I want to increase. So now I want 2,400 So now I can make configuration, and this time I will not forget about the trading up, as I did with the iron, with this trade the last time. So yeah, the answer is that you can only close the bot and then launch it once again with newer settings. Is it possible to change the grid spacing while the bot is active? So the answer is no. I mean, you can change the grid levels amount, you can change the grid step. The only thing that you can change, guys, is here. Like, you click on this button and you can only change the take profit, you can only change the trading up and the stop loss, because other metrics, they are like, you are locked in this metrics, configurations. You are no longer able to change the amount of grid levels, because otherwise it would just destroy the configuration entirely, because interrupting the process is never good. So you are basically trying to interrupt the process of trading. So that's why we don't have this option. And that's why if you want to set fewer grid levels or more grid levels, you just close the bot and launch it with new settings. Okay, the only settings that you can change is the trading up, take profit, and stop loss. Will the futures bot be different from existing plan? Well, if you mean by plan the configuration logic and the algorithm it follows, well, yes, it's going to be like completely different, because this new trend bot, which is designed for futures trading, will have two options, which is the long and the short. So you will be able to launch the bot to generate returns on the downfall, which is basically the short selling bot. And you will have this option to launch the long bot, which will take advantage of the rising market. Okay, so, well, there are tips and tricks related to this new bot, and it's going to be a bit just like slightly more complicated than the spot bot. But what I suggest you to do right now is to practice more with the SBot, like spot market bots, so that next time I present you the trend bot, you would be more prepared to grasp the whole nature of this newly developed trend bot. Okay, it's just about the practice and the experience. The more experience you have, the easier it's for you, and like the quicker it takes for you to understand how the incoming bot is going to work. So I will make sure to provide you with as much information as possible the next time we have the webcast related to the new bot, and I will prepare use cases, and with each new webcast I will provide you with strategies that you can use, because I'm like you guys, I'm trading with you together, and I'm looking always for new opportunities, for tips and tricks, and that's my aim here, to educate you more, to provide you with more tips and tricks. And I hope I'm doing great here. I hope that I deliver what I promise: use cases, strategies. And by the way, you can watch previous webcasts where I cover strategies that you can use. And in Bitsgap, if you go to blog and go to trading bot, there are ready-made strategies. You see automated strategies? That's the one I prepared for you guys. You see rising channel strategy, and the exact configuration for the bot is here. Rectangle top. You see, everything is here for you. So these are ready-made strategies that you can use if you are a newcomer, you've never traded grid strategies, or you traded grid bots but you are looking for new strategies, and so here it is. Okay, so always make sure to follow the YouTube, to read the blog, and to participate in weekly webcasts, because I'm always trying to add some new valuable information, something useful for you so that all together we can beat the market. Okay, and yeah, just quickly remind you that the best way to prove our success is on the Binance Spring Tournament, where I think after this webcast we will have more than 400 people participating in. Like, just make sure to join the Bitsgap team, because there are many teams there. You can either go to the Binance platform to find the tournament page and write down the Bitsgap in the search box to find the team, or just join the Bitsgap team over here. Yeah, so it's in the let's open it, block, and here it is. You see the spring tournament recent articles. Just go here and join the Bitsgap team. That's the link here. Join the link. You see current bonus pool, let's actually see how many of us are there. Let's go to Bitsgap. Okay, for some reason it takes some time to load the page. Well, anyway, I don't want to waste your time just because my internet is having some troubles. Anyway, yeah, 331 so far. Yeah, let's beat the market. Let's make it together. Okay, anyway, thanks a lot for your attention. I hope I answered to all of your questions. If not, then make sure to ask them here in the box over here, the support line that we have. You can also ask your questions in the Telegram chat community that we have, and you can always ask the question in YouTube and as well in the next webcast, because I always make sure to find the best, like the most interesting questions, so that it's going to be a win-win scenario for all of us to provide you with more information as possible. Yeah. Yeah, really appreciate your time. It's such an overwhelming feeling for me to have so many people online today, listening to what I teach you and all that stuff. That's really an overwhelming feeling, and thanks a lot. I will do my best, like I promise, like that's my credo, that's my agenda every day, to make sure next webcast I provide you with more insights and useful tips and tricks, because once again I believe that strong community is what makes Bitsgap unique, and that's exactly what it takes to achieve the highest success. To increase our odds of success is by combining our efforts, and we do this on our webcasts, because I see your questions, and the more interesting questions I see, that's the best feedback for me to prepare answers next time, to elaborate on other topics that are interesting for you as well. So once again, thanks a lot. I appreciate. Stay safe, and I wish you profitable trading, and let's join the Bitsgap team on Binance Spring Tournament to kick the asses. So yeah, let's go, guys. See you.